Is this top altcoin in big trouble? Will July be a good month for Bitcoin? And these four altcoins are seeing more demand from institutional players. This is your Altcoin Buzz news. Hey, what's up everyone? My name is Cody, and if you're new here, make sure to like, subscribe, and turn on notifications so you don't drop latest content. Follow us on Twitter, altcoinbuzz.io, and as always, this is not financial advice, and wish you the best of luck in your crypto ventures. United States spot Bitcoin ETFs recorded significant daily inflows of $129.5 million on July 1st, marking the fifth consecutive day of positive inflows. The $129 million of inflows on July 1st is also the highest figure since June 7th. As inflows turned positive, Bitcoin price reclaimed $63,000 after nearly 3 weeks of struggling to overcome the key resistance level of $62,000. July has also historically been a bullish month for Bitcoin, and with the spot Ether ETF approvals likely just around the corner, the crypto market could see another bullish rally in the coming weeks. Also, Fundstrat's Tommy Lee recently said this about the economy and the stock market for the rest of the year.
Yes, I think that now that we're at the mid-year, 2025 earnings look a lot stronger than we thought at the start of the year. We thought maybe 260. It's probably closer to 275, maybe 280, even 285. And I think the multiple we thought originally could be 20 times that number for next year. But given the Fed has more reasons to be dovish, and I think maybe the employment picture is softening, PE multiples actually could be higher next year. So I'd say between now and year end, stocks should be higher. I mean, we've had a strong first half already, and second half won't be as strong as the first half, but we should build upon those gains. So yeah, it looks pretty good.
The native token of Ethereum Layer 2 network Blast surged after an airdrop distributed 17% of its total supply last week, contrasting with other recent token launches like ZK Sync and Layer 0, which saw significant declines. Blast launched at 2 cents per token, reaching a market value of $2 billion. The airdrop allocated tokens to users involved in bridging assets and contributing to dApps on the network. BlastUP, the first launchpad platform on Blast, has recently launched its native BLP token. Serving as the fuel for the platform, BLP may become an essential asset for developers building their apps on Blast, which ranks among the largest blockchains by TVL. And now you can buy, sell, and trade Blast on CoinEx. CoinEx is one of the best exchanges you haven't heard of. Like Gate.io or Mexi, they offer a lot of coins. More importantly, they offer the high-quality coins you want. CoinEx also has a great new offer out there for new users. Sign up today, complete the 4 tasks, and earn up to $100 USDT added to your account. Check out CoinEx with the link down below. Is Polkadot in big trouble? Recent reports show that Polkadot is spending like crazy with no real return. Recently, community concerns were raised following a Polkadot Treasury report alleging that its project would only have 2 years worth of budget with the current spending. Its head ambassador, Tommy Enenkel, wrote in a June 28th Treasury report for 2024's first half that Polkadot's treasury is becoming more complex and harder to grasp. Polkadot is spending directly, as well as allocating value in bounties and collectives to be spent in the future. At the current rate of spending, the treasury has about 2 years of runway left, although the volatile nature of crypto-denominated treasuries makes it hard to predict with confidence. This has sparked discussions ranging from a stricter budget approach to a change in the inflation parameters of the system. According to some, Polkadot's treasury will not run out of funds after spending the current $245 million, since about 7% of the total token inflation or staking rewards is sent to the treasury. The blockchain holds $188 million in liquid assets, primarily in its native token DOT, and also in stablecoins like Tether and USDC. However, Polkadot had a huge jump in spending in the first half of the year. It spent $87 million in total, with over 40%, or $36.7 million, spent on advertising, influencers, conferences, and events. Ignas on X wrote, Polkadot spent $37 million USD in outreach during the first half of 2024, targeting new users, developers, and businesses. $10 million on ads and sponsorships, $4.4 million on influencers, $4 million on digital ads, yet Polkadot still seems invisible on X and elsewhere. DOT supply grows at 10% per year, significantly increasing token supply. Most of this inflation funds staking rewards. At $10 billion market cap, $1 billion per year goes to stakers, a high cost for network security, yet a proposal to reduce inflation was rejected by 57%. Victor G added, as the founder of one of the largest non-DOT, TVL, and market cap FDV projects in the Polkadot ecosystem, I have to say that we don't want to engage with the Polkadot ecosystem and team at all. It's a highly toxic ecosystem that lacks any real value for Web3 and doesn't focus on users or adoption at all. We're simply too busy to disclose the many facts about the discrimination we face as Asian founders in the ecosystem, which was a sentiment shared by all Asian founders. So right now, it doesn't look good for Polkadot. Hopefully things turn around. But what do you guys think? Let me know in the comments down below. Ethereum Layer 2s are growing like weeds. They're one of the few areas in the market seeing real growth. We know part of the reason is that the main Ethereum Layer 1 chain is unusable most of the time, yet many Layer 2s are still fighting out for leading spots for EVM supremacy. One of the newest and most interesting is Neva Network. Neva Network says it's a modular chain using the best technology available, and their proof of that is in their two big tech decisions. First, they're using Celestia for their data availability layer. Celestia is one of the first and one of the best data availability layers if you're building out a modular blockchain. Secondly, they built their chain using Polygon's ZK EVM. This is a blend of two important technologies for blockchain: the use of zero-knowledge tech for privacy and compatibility with Ethereum's virtual machine. EVM means the most access to the most dApps, and ZK ensures your privacy when moving data around between the Layer 2 and Ethereum's Layer 1. Neva's focus is on GameFi and DeFi. The speed and the low costs are especially good for games. Games need to move fast and have cheap transactions. Plus, the transactions have to be seamless as to not interrupt the gameplay. The Neva Network will be in testnet any day now, although the mainnet launch is scheduled for later this year. Its goal is to use the best tech out there to be fast, scalable, inexpensive, and secure. Check out Neva Network with a link down below. In a significant shift within the crypto market, institutional investors are increasingly turning their attention to select altcoins, defying broader trends of outflows. Recent reports highlight a surge in interest towards these altcoins as Ethereum faces notable outflows. First off, Solana is going to get a big boost. In fact, it already did get a slight boost recently after Vanek decided to file an application for a Solana ETF. Solana has dethroned Ethereum in daily DEX trading volume, and Solana just printed a new all-time high in monthly economic values, which is fees plus MEV, at $91.3 million or $1.1 billion annualized. The economic value is driven 53% by priority fees on non-vote transactions and 41% by DDoS tips. The second altcoin is Chainlink. Chainlink saw a considerable spike in developer activity in June as the decentralized Oracle network climbed into second spot behind Hedera, according to data by market intelligence platform Sentiment. According to Sentiment, Hedera remained crypto's top coin in terms of GitHub activity. However, Chainlink developer data from its GitHub repository showed a surge in number of events in the past 30 days, with the project rising to second. While Hedera continues to lead by 759 GitHub events, Chainlink on Ethereum accounted 526 events to rank second. The third coin is XRP. XRP continues to draw attention due to its utility in cross-border payments. XRP is resilient and shows growth potential, positioning it as a key player in the evolving crypto landscape. Increasing institutional inflows reflect a shift in investor focus towards this asset. And lastly is Litecoin. Litecoin has managed to draw notable interest with inflows of $1.4 million. It attracts investors due to its use in digital transactions and its reputation as a more scalable and faster alternative to Bitcoin. According to Litecoin, over 25 million ordinals have been inscribed on the network as of June 27th. Besides demonstrating the network's capacity, the ordinal boom reflects the growing interest and potential for broader adoption. In early June, there was a 75% increase in active addresses and a spike in transactions, rising by 426,000. This surge propelled activity to the highest level in 6 months, surpassing activity on Ethereum, the most active platform.